Welcome to the fourth episode in our series as we continue to unpack PwC's latest thought leadership. Are you reporting for a sustainable future? South Africa's perspective on a changing global landscape. My name is Jan-Ben Wiese and I'm joined by my colleagues Taskeen, Jaffer and Zakiyyah, Seedat. And today we're going to continue the conversation looking at the topical matters of materiality and the reporting entity, or also referred to as the reporting boundary. Taskeen, if I can start with you, could you help us understand why materiality is such an important concept in the standards issued by the International Sustainability Standards Board, or the ISSB?
Yes, sure. So the reason why materiality is such an important concept in sustainability reporting is because it helps entities determine what information is included in their sustainability reports and what information is not included. From the benchmarking exercise that we conducted, what we noted is that most entities are currently applying a double materiality approach, meaning they apply both impact materiality and financial materiality. Financial materiality refers to how an entity's financial position and performance is affected by outside factors such as the economy, the environment, and people. And so we usually refer to this as an outside-in perspective. Impact materiality, on the other hand, refers to how an entity's business activities and relationships affect factors such as the economy, the environment, and people. And so we usually refer to this as an inside-out perspective. The ISSB standards, however, require entities to apply a financial materiality approach. But as I mentioned, most entities are currently applying a double materiality approach. However, when we looked at the reports, we found that there was really clear and separate disclosure indicating what was considered material from an impact perspective versus what was considered financially material. Now, because the ISSB standards are intended to become the global baseline for sustainability reporting, entities should start thinking about whether or not they want to voluntarily adopt the standards now, or at least they should be ready for when they need to mandatorily report on it in the future. Now, as part of that, and some of the considerations that entities should keep in mind is how can they retain their current materiality disclosures without obscuring from the information that is explicitly required by the ISSB standards.
That's very interesting. Thank you so much, Taskeen. If I can move on to you, Zakiyyah, why is the reporting entity such a fundamental concept in the standards issued by the ISSB?
So the reporting entity, or reporting boundary as it's sometimes referred to, is really fundamental because it sets out which entities, assets, and operations are actually included in an entity's sustainability reporting. IFRS S1 requires that the reporting entity for the financial statements is the same when it comes to an entity's sustainability-related disclosures. So, for example, if for the financial statements, the reporting entity is a parent company and its subsidiaries, the same boundary would need to be applied when it comes to an entity's sustainability-related disclosures. Now, in a South African context, it's not, or most entities are not yet reporting in accordance with the ISSB standards. And so it's not yet clear to us how this principle is being applied or even whether it's being applied. This was also made clear in our benchmarking exercise, where most companies didn't consider these other investments beyond subsidiaries, such as associates or joint operations. Now, while IFRS accounting standards are clear about how these other investments beyond subsidiaries should be reported on, the ISSB standards are not as prescriptive. However, an entity would be required to consider these other investments and business relationships when assessing its value chain and how it defines its sustainability-related risks and opportunities.
Yes, I agree. And these are actually very complex areas within sustainability reporting, especially when we start to consider how it would apply to entities with global operations. However, our publication does explore these concepts further. We encourage you to read our publication to gain a further understanding of these complex concepts and to understand how your organization can begin to apply the global baseline in sustainability reporting.
Zakiyyah, Taskeen, thank you very much for your time today. Really appreciate your insights. In our next episode, we will continue unpacking our publication, specifically looking at the disclosures in the governance, strategy, risk management, and metrics and target section of the ISSB standards. Stay tuned and let's continue shaping a more transparent and sustainable future. See you on the next episode.